Welcome to Finance with Shahrukh. On this channel, we talk about finance and the economy in simple terms. Let's begin. You click buy on a stock, but before it reaches the market, someone jumps ahead. Welcome to high frequency trading. If you want more deep dives into how money really works, subscribe to Finance with Shahrukh, because understanding the system is the first step to beating it. High frequency trading, also known as HFT. This isn't just trading. It's a war of speed. On Wall Street, some firms don't rely on humans. They rely on fiber optic networks, laser-based communication lines. On Wall Street, some firms don't rely on humans. They rely on algorithms, superpowered computers, laser-based communication lines. And here's the shocking part. Many of these firms place their servers directly at practice known as stock exchanges. Because in this world, distance is money. Just 1 millisecond can mean millions of dollars in profit. It takes you about 300 milliseconds to blink. High-frequency trading firms, that's 1,000 times faster than a millisecond. Think about that. Before you even blink, thousands of trades have already been executed. Let me ask you something. What if I told you someone could make millions of dollars from a 2-cent difference? High-frequency traders don't invest like Warren Buffett. They don't hold stocks for years. They hold stocks for seconds, sometimes fractions of a second. Imagine a stock trading at $100 on one exchange, that tiny 2-cent gap, but their algorithm sees it instantly. In less time than you can blink, buy at $100, sell at $100.02. Profit, just 2 cents. Sounds small, right? Now multiply that by thousands of trades per second, millions of trades per day, sometimes billions. But now pause for a second. If they're making billions from tiny price gaps, some on the other side of those trades. What if I told you the market isn't just fast? It's rigged by speed, not illegal, and by the time you click buy, the game is already over. Critics say high-frequency trading is unfair, but unfair doesn't mean illegal, and that is what makes it dangerous. Let's rewind to 2010, a normal trading day, until suddenly the market collapsed. During the infamous flash crash, was it manipulation or just machines reacting too fast? Regulators struggle to keep up. Do small investors ever really stand a chance? Here's the deeper danger. Markets weren't always like this. The patterns are evolving, and that's what we need to watch. They used to move on fundamentals, company earnings, economic reports, long-term growth, real businesses, real performance, real value. But now, a massive portion of trading volume doesn't come from investors. It comes from machines. Algorithms battling other algorithms. Not thinking, not analyzing like humans, just reacting in microseconds. And here's where it gets dangerous. If one algorithm makes a mistake, it doesn't stay isolated. Instantly, within seconds, billions of dollars can move. Not because a company failed, not because the line of code acted the wrong way. So the real risk isn't just volatility. It's systemic and so interconnected that when something breaks, it spreads everywhere. Before humans even realize it happened. A market where humans no longer lead, they follow. So next time you invest, because you're not just competing with other investors, you're competing with machines. Supercomputers running complex algorithms, artificial transmitting data at the speed of light, and firms that measure time in millionths of a second. High-frequency trading isn't illegal. It isn't hidden in the shadows. It operates in plain sight. But make no mistake, it is powerful. So the real question isn't whether HFT exists. Is this innovation making markets more efficient or more fragile? Because in the risky world of high-frequency trading, speed isn't just an advantage, it's everything. If you want more deep dives into how money really works, subscribe to Finance with Shahrukh, because the first standing the system it.